Hello, chart watchers, and welcome to this Friday, January 5th, 2018 Market Watchers Live show with Greg Schnell and Aaron Swenlin. I'm covering for Tom Boley, who's out today. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be each show will be archived on our site until the next show begins, so roughly for 24 hours. If you'd like to review an older show, you can now find those on our YouTube channel or on Facebook. During today's show, please feel free to submit ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, we'll select stock symbols from your requests, and I'll use those in the 10 and 10 segment at 12:50 Eastern Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live airs 5 days a week, Monday through Friday from noon to 1:30 Eastern. If you want to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is @MarketWatchersLive, MKT Watchers Live. As you leave today's show, we'd love to hear your feedback. In the lower right-hand portion of your screen, you'll see a How'd We Do section with a link to a very brief survey. Let us know what you think of Market Watchers Live and provide us suggestions for improving the show. For those of you who are joining us for the first time today, welcome to the show. We're glad you're with us, and for our regulars, welcome back. One quick announcement. Bruce Fraser is going to join us next week, and Bruce is going to do Wyckoff on Wednesday. For all of you who are unfamiliar with Wyckoff, a strategy is an in-depth study of how bases are built and tops are made. Really an important market methodology, and so I think you'll thoroughly enjoy Bruce. He's a great speaker. With that, I have one other thing to go over, and briefly, we just had some economic news. The U.S. The U.S. market was had a jobs report this morning, and it was a little light. It came in at 148,000. On the other hand, the Canadian job report, which isn't usually aired today, is 78,600, which was the best increase since 2002. So really stunning number for the Canadian side, and the U.S. has been on a roll forever. So one month with a little bit weaker is no big deal. Anyway, we have lots to cover off today, and I've got my co-host with me, Aaron. So good morning, Aaron.
Good morning, and thank you so much for covering for Tom today. We decided to put Greg on the spot because I'm going to be doing so much talking today. They were nice enough to try and save my voice, and Tom is still having trouble. He feels fine, but he's got such a cough right now that he just didn't feel comfortable doing the show. And Greg, thank you for filling in today.
No problem.
All right, well, let's take a look at our agenda for the day. Lots to cover here. I will be doing my decision point scanning workshop. Hopefully you guys are joining. And for those of you who are joining for the first time, Fridays we do workshops. And so this is my turn. And I'm going to talk to you about scanning and using decision point in particular to help with your scans. So everybody's always so excited about my PMO scan. I'm going to share a lot more with you today. So get ready to take some notes and screenshots. And then I will post a lot of this into the Market Watchers recap blog this afternoon. We'll be doing the 10 and 10 to 1. I've put Greg on the spot. He's going to fill in for Tom and look at 10 charts. We'll probably look at maybe weekly charts just to shake it up a little bit. Our first stock will be NVIDIA. I don't know if anybody's heard of that one, but we'll be covering that one off first for the 10 and 10. So you can go and make some notes and see how you compare to Greg and I. The DP sentiment report is going to finish up the program. And again, that's another reason why we have Greg, because I will be doing a lot of talking today. So again, I appreciate that, but we need to probably get started right now, and let's see what's going on in the market for our first market update. And I'm going to go ahead and start with our candle glance. You can reach this from the home page in your Pro Control Center. And what you can see right here is the Dow is up. Most of the major markets are up right now, continuing higher. Looks like we're having a little bit of a pause right now. NASDAQ's just continuing higher. Nice straight up move there. Russell 2000, we're seeing small caps struggling just a little bit. They're all on the upside, but that's, you want to see them participating in the same way as the major indexes, and we're not quite seeing that right now. We can see that Treasury yields are up slightly here, reading at 24.75 right now. And we can see UP is also up. It had a gap up on the open, but it has pulled back from intraday highs and now is getting ready to test possibly some intraday lows, but it's reading at 23.97 for UUP. Commodities are down and likely affected by oil, which we can see USO took a gap down this morning and then tried to recover, but has fallen even further, set a new intraday low. And it's trying once again to bounce off of that intraday low and get up toward positive territory, but not quite there yet. Gold is mostly unchanged right now, looking at GLD at 125.44. Difficult morning for gold, but it did manage to get right back up. It's down 2 cents right now for GLD. VIX is had a rise in the morning, but now we've pulled that back from above 950. We're now looking at readings at 932, which is still very, very low for the VIX. Certainly implies a lot of complacency, as we say, when investors, when we get a VIX that is this low. And you can see declines are leading advances at this point in time. Going back to the member homepage, let's take a look at the market summary. And this is where we'll be able to see what's happening with our sectors and industry groups, as well as our international ETFs. And to start off, technology, not surprising when we see a NASDAQ rising almost straight up, to see technology leading as far as the sector spiders. And we can see that energy and utilities are the laggards, with energy down almost 0.5% for XLE. U.S. industries, paper is leading, computer technology and the semis. Again, a lot of tech there, heavy on the top of the list. Natural gas, commodities, oil services are all lagging. Again, you could see that in the candle glance that I gave earlier. As far as our international ETFs, if you look at the whole list, they're all up except for Singapore and Austria. They're the ones that are struggling right now, down slightly, just a little over 0.1%. And that's all I have for our first market update. And I'm going to send it back to you, Greg, for your comments on what's going on in the market so far.
It has been an unbelievable run since the first of the month. I think we're up 40 points on the S&P already, and it was relatively flat for the last 2 weeks of December. So the market literally went sideways for a couple of weeks and then just vertical. So it's really been a stellar run. One of the things we talked about yesterday on my commodities countdown was just, an S&P with a weekly RSI at 85 is really a stunning number if you pull up the S&P for a long period of time. Go back 20 years. We just haven't seen this level of, I'll call it euphoria, kind of sitting in the market so long. So one of the things that I mentioned it on my commodities countdown yesterday. And for
those, Greg, do you mind taking the screen? I don't know if you had a chart you're talking about or not, but
let me just share screen. And okay, let me just get this tightened up. There we go. Let me just pull up the S&P real quick and show you what I mean. So one of the big things that, that's a lovely chart, isn't it? It is crazy how much it has gone up. So one of the things that I like to look at, one of the benefits of having long-term data is just being able to go back and seeing, how exceptional is where we currently are. And, the biggest problem we're going to have here, I just want this to be above, scooter line. Okay, so what I'm setting up here is an RSI, and I want to change the chart basis to weekly and just display that out. Okay, so that's 1 month, and you could see we've been rising steadily, but we're right up here, 84.74 to wrap up this week. And when we just unwind this chart for 20 years, you get a relative reference point. So that's going to include the 2000 high, the 2007 high. Like even in 2000, we were already on declining euphoria. And here in 2004, and this is one of the periods I want to compare the market to the most, because it was also a period where the US dollar topped out in 2002 and pulled back. And then in this case, the overall market was bearish, but we had a stellar year-long rally coming out of 2003. And then in early 2004, basically the market, it still had energy. It just didn't have a lot of energy to climb higher. I'm not so sure that we have that situation. I still think, strong stocks like Netflix and that kind of thing can still move higher. But the bigger issue for me is just when you get this level of euphoria, it really becomes much more difficult to try and continually add. And normally you won't find institutions that are trying to put money heavily to work with this sort of overbought condition. Now, that doesn't mean the market has to fall apart. It just means that it might take time to digest the gains. So one of the things that I'm looking at just as I'm trying to trade is trying to find stuff that's either oversold and looks due for a bounce up. So using either a full stochastic scan or using a Keltner channel scan or something like that to try and find things near their lows that might get a bounce up. And so with the overall market just being so frothy, and if I just go to a simple let me just go grab gold as an example, because it was discussed heavily before Christmas. But look at this stellar move. Like, this is 30 days or 20 days in a row where it's just literally climbed up every day. So the one thing that the chart on the front of my Commodities Countdown blog today shows some red arrows and some yellow arrows. And what those red arrows indicate is roughly around the first week of the month how gold likes to top out. And then some orange arrows where it tops out in the middle of the month. And I think I might even have that chart quickly. So let me just see if I can grab it. GLD. Here we go. So the point would be just around the first part of the month, you can see that gold has a habit of kind of exhausting its advance and then just taking a breather. I still think gold's going to have a tremendous year this year. But, after these stellar runs that take us into the beginning of the month, so last year it was October to early November. Here we are, early December to early January. This one in here was a 2-month run. It was stellar, obviously. But even then, we still paused and went sideways for a couple of weeks in the middle of the month. And so I'm looking more for a pause in some of the euphoria that we've had, not so much a pullback, but a pause. And I'm going to cover off commodities in the second half, but just trying to discuss about how vertical the market has moved. Somebody wrote that we had climbed through 8,000 Dow points in 2017 and just hit 25,000 this week. Those numbers are awesome to see it move that fast and that smooth. But at this point, I want to start being more selective or a little more careful about trying to buy stuff that's breaking out to new highs, because it just feels a little bit overbought. So that's where I'm at. How about you, Aaron?
Oh, okay. Sorry about that. I had muted myself. Yeah, I agree with you. Before I go on, though, somebody did mention that your sound is kind of going in and out, and I know I do it too, looking away from the microphone and such. But
Yeah, maybe I'm doing that. Okay, I'll check.
I don't know. Just wanted to let you know.
Sure.
But yes, I'm very bullish on gold for sure at this point in time. So, I don't see any reason why it can't continue to climb at this point. My only concern, really, when you look at it, is sort of that parabolic that has kind of formed since the recent bounce. But other than that, I think that we can still do it. I think that rise on GLD to test that previous top is completely doable.
Yeah.
But yeah, right now I'd be a little worried with that parabolic. We do need to consolidate it or maybe even pull back a little bit. I could see it going down to test that area around 123 for GLD. So
Okay. Well, Aaron, you were going to cover off some stuff right away here. So why don't we let you do that, and then we'll get after Aaron's finished her wrap up, we'll jump on the 10 and 10 and try and work through that. So I'll let Aaron fire away here with some of her decision point stuff. And to make sure everybody heard, if you weren't here the other day, but Aaron and Carl, Aaron's father, they made #1 on Market Timer Digest this year for timing the S&P market. So that is it's a not an internal award, it's an outside award. Basically, you present your system, and they've got a whole bunch of people who have put their systems up for testing. But they've always been in the very top of the market, top of it. But they won the award this year, which is a really big deal. So congratulations.
All right. Well, thank you for that. Yeah, it was pretty exciting. We'd been watching it for about 8 to 9 months of the year. I was not even on the top 10. And then, like in October, it just wound up and I just popped right up to the top. It was really exciting watching it go and waiting. I think really the only thing that would have been a problem is had the market backed off a lot, then we really wouldn't have been doing very well there. So can you see my screen here? Let me make sure I'm in the right thing that I should be in. I just want to make sure everybody can see it. Does that look good?
Yeah, decision point technical scanning.
All right. Okay, well, let's get started. Let's see. How do I close this down? I don't want it there. I don't know if you can see my bar here. I'm not sure how to hide it. Oh, well, it is what it is. Okay, so yeah, I'm Erin Swenlin. I'm going to talk to you about decision point scanning, but it's really important, especially for those that are new, to understand the decision point system somewhat so that you can see how you would take that and marry it with the scan engine. So I'm going to kind of go through a little bit of review for those who are the decision point fan base. This is all going to be old for you, but always a good refresher. And those unfamiliar with decision point, well, let's get started. What is it? It was a company that was founded by Carl Swenlin in the late 1990s. And in fact, that's when Timer Digest started following us. And we basically send them our timing signals and they track them amongst all the other newsletter writers that have been invited to participate. And so this is honestly the first time we've ever made the top. So it's really exciting. So anyway, from the company though, we morphed into an analysis process. So through the development of the company and the charts, we came up with our analysis process. Carl came up with most of the timing models. I did help him a little bit on the PMO. And then we have a lot of specific market indicators. And believe it or not, all of these things are going to be useful to you for scanning, and that I'm going to show you why. So you'll also you can see we have a decision point blog. And so if you really want to follow our analysis process and see what I'm seeing based on the decision point process, that's where you want to go, is to that decision point blog. All right, so why do we scan? We want to focus in on our investments and weed out the chaff. So the best way to do this, you've got to create your chart lists and watch lists, and you can use these scans to do that. One of the great things I like, of course, is you're going to find really great investment opportunities using these scans. Let's face it, that's what we're here for. That's why you all are watching this show, and that is why you are members of Stock Charts or are planning to be, hopefully soon. So here's the scanning process. The first thing you want to do is identify your market bias. And this doesn't actually come into play necessarily into your actual written scan, but it is important to understand what the market bias is so that you know really what scans to run, because you can use all of these scans and basically change your equality signs. You can just switch them from greater than, less than, and then you can make it a bear market scan. So if you're in a bear market, you don't want to be looking for buys necessarily. You might be wanting to scan for shorting opportunities, and vice versa. We're in this very strong bull market. So why would you scan for shorting opportunities? There's no reason. The next thing you need to do, though, is now that you know what the market is doing and you know which things you're going to look for, either buys or shorts, Now you need to identify the trends within the stocks that you're looking at. So you want to find stocks that have a good EMA configuration. Now, I'll go over this a little bit more in detail later, but I just want to give you the process in general. So you identify your conditions after that. Is it overbought, oversold? What is momentum looking like? And that you can do simply with the PMO. And I'll be showing you that when I go through the scan. And then, of course, our last thing is you identify the trading opportunities. And that I will show you how to, once you get all of your results, how do you cull them? How do you pick out the good ones? Because if you get a scan with a result of, say, 25, 40 stocks, you've narrowed it down to a lot of good opportunities, but how do you then go through and, take out the dogs, basically? All right, so let's start with identifying your market bias. I'll go through this rather quickly because really, if you go to the DP scoreboards, that's really all you need to know. I mean, and currently, if you look at the DP scoreboards, they're completely green, except for right now, the Dow is still holding on to a PMO sell signal. So that might tell me, just by looking at the scoreboards, okay, I might want to back off on industrials. I may not be interested in those because it might be an area that's not performing as well. You can also go through and review our market indicators, and this can be done using the decision point chart gallery, or best result is, again, to go to the DP blog. The DP alert, if you see that in the title, I will go over all of these indicators in there, so you don't have to actually get in there and analyze them yourself. You just go to the DP blog and look for those with the title of a DP alert or Carl's weekly wrap, and that also will include all of these indicators. And it's a great way to understand how they work and what we see when we analyze them. And you can do that at least 3 times a week. And then really the most important thing is pay the most attention to your time frame. Are you looking for a short-term trade or an intermediate-term trade? Then really when you're looking at these indicators, which are going to be a little bit more important to you. If you're a day trader, a really short-term trader, you want to make sure you look at these ultra short-term indicators. And I use breadth, the VIX, and of course you get through candlesticks. That gives you a bit of a look as well. All right, so based on the market sector industry bias, you want to go and pick your universe. So in this case, I've got the S&P 500 as my universe. But you could use a sector. You could scan on an industry group. Or I think one of the most powerful things to do is take your watch list, your chart list with all of your stocks in it, and you can have it just scan that. So you don't necessarily have to go out there into the giant universe to find your stocks. All right, so the next thing you want to do is, of course, identify your trends, what's going on with the EMA configuration. So you use the trend models for that. That's what we do at Decision Point. So we have a long-term trend model, which is those 50, 200-day EMA crossovers. That's what you're looking at. Is it a bull market configuration when the 50 is above the 200? The 50 is below the 200. Now you're in a bear market configuration for that particular stock index. And intermediate term trend model, this is your 20, 50-day EMA crossovers in relation to the 200-day EMA. And again, the reason I'm showing you this is I'm going to use these in my scan. So I find them very important. And again, based on your trading term, it can tell you how you want to check it. So if you're a short-term trader and you're mostly interested in those trades, then you're going to start looking for the 5 and 20-day EMA crossovers in relation to the 50, because you want to see those quick momentum moves. You want to get in, get out. So that would be what you would look for with the short-term trend model. I think that the intermediate term trend model, that's what I use in my scans because I'm an intermediate term trader. And I think that works very well to help with your scan to focus in on those that have the right signals. So for example, here's your 50, 200-day crossovers. That's a long-term buy. You've got a long-term sell. So again, you can see when we got that long-term sell signal, that's telling you we're in a bull market or bear market configuration. Look out below. And sure as heck, we went all the way down. So very important to know where your long-term setup is. So I would always include that in a scan for a buy or a sell. I would want to know that the 50 is above the 200 for a buy. So that's what I want to scan for. I don't want to look at any stocks that have 50s below the 200. Why? It's just, you want to find those things that are already have a good batting average. They're already set up. And then these were the intermediate term trend model signals. Anytime you get a positive crossover, 2050, that is a buy signal. So again, you're looking for an intermediate term trade. You either want to see that crossover or you already want the 20 to be above the 50. So that's kind of how you would use your trend model signals. Now, again, for those short-term traders, you're going to be looking at the 5 and 20-day EMA crossovers. So that's going to give you a lot more volatility, but that's fine because if you're short-term, you're pretty much looking for those moves. And obviously, if you're going to get a positive crossover on the 5 and the 20, that's usually your good sign. You're going to see some more. And of course, that means you're going to have price above the 20. So that's a good time to get in usually. That's what we usually look at. So again, that's what you do for the trend model as far as scanning. So here's what you're thinking about, right? So you've got your trading time frame. So you want to scan using your time frame. So figure out which of these EMAs you want to use so that you know the location. And that way you've already narrowed down the pool to just those that are strong candidates because of where their EMAs are located. And so that's why I talk about using the trend models. So here's, let's just get started right now with what this scan looks like. Remember, we first picked our universe. Then you want that positive lineup of the EMAs. And this, it says basic DP scan, but this is the one I always use for Monday setups, for all of that. So highly recommend this scan. It is available to you to copy and paste into your own advanced scanning workbench for extra members and above who have that. So I love this scan. So that's what we're kind of going over. So we want to see a positive lineup of those EMAs. So you want the 20 greater than the 50. You want the 50 greater than the 200. I want a stock that's already in a good trend. I don't necessarily have to worry about it losing that trend. So what's the next one for our scanning process is we want to identify our conditions, and that includes momentum. And you want to look if your momentum or your PMO is overbought or oversold. You want to know if the PMO is rising, falling, or had a crossover. It just depends on your style, but you want to include a PMO line or two in your scan as well, and that will also continue to narrow down what you want. So when you use the PMO, you're looking for the positive and negative crossover signals. You want to look for momentum reversals. And the way I do this is I scan for bottoms. So I'm looking for changes when a PMO has been going down and all of a sudden it turns up and it starts rising for the 2 or 3 days. Doesn't have the crossover, but it already is telling me we've got a bottom in there and it's heading higher as far as momentum. And even though I don't have the crossover, there's a high likelihood I'm getting in early by not waiting. All right, PMO, you want to look at overbought and oversold. So again, when we go through the scanning process and you get all of your stocks and such, you want to review them. And this is one of the things you're going to look for is whether it's an overbought or oversold range. I use the PMO as a confirmation indicator as far as getting out. I typically only use it. I use it to get in. I follow it. As far as what it's doing to get out. But it's at that point, it's for confirmation, is the trend holding up with momentum? So here we go. Here's your PMO timing signals. So the blue lines are reversals. So you don't have the crossover just yet. And the red one is when you've actually had the crossover. And I think you can visually see that very helpful. It generally is going to get you in when you need to get in, and you're going to get warning to start watching when you get that turnover. So let's look at this one in particular. You had a blue line where we got the top, we had that reversal. All right, gave us a little bit of warning. There might be a problem right here. So that's when I would have probably started watching what was going on with my stock. And typically I start watching that 20-day EMA. So in here, I would have seen the reversal, and then I would have gotten that drop below the 20, and that would be my signal to get out. And so then I missed all of this difficult period. So PMO scanning is very, very useful. So let's look at it when you use it in a scan. So you have the you want to get a PMO reversal detection, right? Because you saw in that last chart, you want early warning, not necessarily waiting for the crossover. So I look at within the scan, the first day, the PMO is falling, and the second day and third day, it's rising. So that makes a PMO bottom. So that's what I'm looking for. You can add the PMO crossovers if you would rather not get as maybe aggressive. You could instead use your crossovers instead of the reversals. I prefer the reversals. That's me. Because you can always watch it and wait to see if you get the crossover. So for that reason, I don't really want to see a crossover yet. So I need to see the PMO below its signal line. And that's what this is telling us, less than the signal line. Now I want to see it rising for the last 3 days. So you want to take today's, and it should be greater than yesterday. And then you want to take yesterday's, and it should be greater than 2 days ago. And then finally, 2 days ago, you want it greater than the line from 3 days. So that gives you a PMO that's rising for 3 days. All right, so now you've got to review all these scan results, right? You've now figured out your scan, you've run it, and now you have 55 stocks to look at. So what do? So first of all, you want to create a chart list from those scans, because then you can manipulate them and start looking at them. You want to review your by candle glance or 10 per page. So if you have a group of maybe 15, I would go with 10 per page because, of course, it's bigger. But candle glance works just fine to just start getting some of the chaff out of there simply by looking for overbought PMOs and chart patterns, etc. So you want to use that to clear out the dead wood. You don't want to look at those. So as I said, ugly chart patterns, overbought PMO, look at those support and resistance levels, and that will help you just throw it out. And I'll show you how to do that right now, in fact. So let us go to here. All right. And I don't want that, of course. All right. So let's start looking at some of these scans. All right. Here we go. So let's look at that one that I just did for you. And that is this one, because it does just the S&P 500. So we're going to go to where we would edit it so you can see it. All right. So actually in this one, it has been adjusted to include the S&P 600 as well. And I think I added that in there for Monday setups because I just wanted a greater universe to scan from. So picking a universe is a good idea. Because otherwise you're going to get a lot of cats and dogs. You might have, if you go in the whole universe, you need to set your country or your exchange. But if you already have a chart list that you want to scan against, or if you want to do these groups, I think that I highly recommend that because otherwise you really can come up with some real cats and dogs, I would say. So the PMO has not yet had its crossover. So there we go. Remember, this is exactly what I was just showing you in PowerPoint. And there's the rising for the last 3 days. And here is the positive lineup of the EMAs, which I talked about as well. So, 20 above 50, 50 above 200. So let us run this scan. I haven't run it, so this is all new to me. All right, well, great. See, we only ended up with 10. So that makes it pretty easy. I'll show you how to do it with 10 per page. But remember, we first have to store the results or we can't manipulate the table. So I'm going to say replace. I highly recommend this. I actually got it from you, Greg, because I happen to be watching you years ago, that you had a chart list just called Scan Dump. I think that's brilliant because it's a real temporary place. It just gives me a place to dump the scan. And, once I've figured out what I want, then I can save it to an actual chart list. So here's what we're looking at. So you can identify it, as I said, you can use Candle Glance. But in this case, we have so few charts, I'd rather look at it in the 10 per page. But we'll look at a scan where you have the Candle Glance, because I do want to show you how to get rid of, like I said, the dead wood when you're going through these scans. I think that's, developing the scan is especially important, obviously. But the other thing is, once you get those results, you really need to be able to look at it and get rid of the ones that just aren't at all interesting to you. So this one, so what do we got here? The PMO's overbought. That could be a real problem. However, I'm looking at a chart pattern that is a bull flag. And look at the space between these EMAs. It's been on a nice run. You could probably draw in a rising trend channel. I would probably go ahead and, despite the fact that the PMO is very overbought, I would go ahead and just keep this one in for now. Since we only have 10, I don't have to be quite so choicey about it, I guess. Look at this one now. I like this a lot better. And here we go. So we have a PMO that bottomed above the 0 line. That's always a plus. Doesn't necessarily have to be in extremely oversold situations. I mean, you can see right here, it came in just below the 0 line. It didn't have to get all the way oversold. Also, look at this. I can just see it right now. We had negative or positive divergence here with the PMO. And once that hit and we got this buy signal, we were off to the races. So, but we're looking at it right now. What is it telling me? Okay, well, the scooter is in the hot zone, in my opinion. We've got, the OBV is continuing to rise with this particular move. And again, we have that PMO crossover. So I think this one's interesting. However, it hit this overhead resistance and was unable to get to it. It just had a 3.5% drop. I think at this point, I would just say, I'm not liking it. It looks like it's ready to turn over. So, and again, this is my opinion. You could be looking at these and have a different opinion, but I'm just going through what I see and whether I would dump it or keep it. So this one, just since we've been discussing it, has actually topped below the signal line. So not interested. That's an easy one to get rid of. All right. Next one. All right, I like this. The PMO is set up nice. Usually with this one, you can see the crossovers are fairly clean, like that. This, obviously, when you have straight sideways movement, you're not going to get much change in momentum. So we got a lot of noise here. But again, look at this is actually a bullish confirmation right there with the price bottoms. Got that buy signal, of course, on the gap up. The PMO went into that overbought territory, but it's come back down nicely with gap support hanging in there. The 200-day EMA has also worked as support. I'd keep this one, add it to a watch list. All right, we're going to go down to the next one. ChemMed. All right, nice breakout above resistance. I like where the PMO is setting up. Look at the OBV. And it's just been rising ever since mid-September. Very nice. Scooter's been staying in that hot zone. Looks great. So I would keep this one. But anyway, now that you see how that works when you go through 10 per page, let's run a scan that's going to take up a lot more, get us a lot more results. And I'll just sort of give you a real quick look at my, my scans that I have. I don't actually have a whole lot because I already have an analysis process and I don't really stray from that. It's worked for me for all these years. So no point for me to add in, RSIs or, MACD crossovers or whatever it is. You certainly can. But when you use this analysis process, I stick to it. And so all my scans are related to it. So here's one where we're probably going to get a lot. All right. So this one is you want the 20-day crossing the 50 and the 50 to be above the 200. So I'm looking for recent crossovers against all US stocks. I imagine we're going to end up getting a lot of these. So let's see. Could be surprised. Who knows? 108. Okay. Yes. So see, this is a good example. All right. We're going to replace it. I'm going to go right back to our scan dump. Here we go. Because I don't really need to save those others. And now with 108 to look at, 10 per page just isn't going to work unless you have all day. So I like to use Candle Glance. And I also wrote an article about this. So, gosh, I think I said PMO plus Candle Glance equals, oh, I can't remember, success or something like that. So if you check, I wrote that a long time ago, but I think if you run a search, you might be able to find it under my Aaron PMO scan. I think it comes up. All right, so here's a ton of them, right? We have 108. So we have to be a lot less selective. So I'm just going to look right now at PMO locations. That's all I'm going to do. So at this point, that's overbought. That kind of looks like it might be okay. Those are nice right above the zero line. So I definitely want to keep those. So I'm going to just take out anything that doesn't have this sort of a setup because I have 108. So we'll just go through and very quickly, I like that setup. That's good PMO. That's a good PMO. This one's getting overbought. Let's see. So anyway, this is sort of what you might want to do. So now I'm just going to go back up. We have some interesting ones. Okay, the nice PMO bottom above the zero line. We're getting the crossover. But I see resistance is holding up, right? And you can see you can change your the view of your Candle Glance. It's very easy. It's just you make the style you want in your charting workbench. And here, I'll just bring it over here very quickly. So I like my Candle Glance to look like my regular charts, but maybe you might want a 6-month chart or something different. So you would just set up all these things the way you want them and then add new, and you just simply call it Candle Glance. And I don't think you have to have the capitals in there, but you can add that, and now that is going to become your the style you're going to see when you go into your Candle Glance. All right, so I thought this one looked interesting, and actually I'm looking at this, even in the Candle Glance, it looks like we went up through overhead resistance today. Really nice. I like that. Again, you've got this nice PMO crossover now. Look at OBV is staying strong. Scooter has been looking great most of the year. So this one, I would have probably added to my Monday setups. I just think this looks pretty good. We just had that 520-day EMA crossover. So I would add that to a watch list, for example. That was the one we were looking at, ABMD. So I want to leave some time because I want to answer any questions that I can. I will post this scan that I just ran and the scan that I put in before. That's already out there. You can go to the Market Watchers recap and scroll all the way down to the bottom, and there's a clickable link that'll take you right to the article about my PMO scan to rule them all. So that's the scan you want. You can get to the link in Market Watchers recap, but I will also include this scan that I just ran for you, and you can start looking at possibilities and such. So like I said, overhead resistance. I mean, I can just, I'm pretty fast at this now because I know what I'm looking for. But that I'm already seeing resistance held. So, it's just for me, I just look for those support resistance levels, chart patterns, especially great. Like this is a breakout, so I would think this one looks pretty good. And well, didn't quite get over that overhead resistance, but we're seeing a nice PMO buy signal. However, also glaring right now is this negative divergence between the PMO bottoms and the rising bottoms. So that would probably tell me to dump that one. I just wouldn't include it. So there you go. And 108 are a lot, so you may want to go back and do a different one. I want to show you one more scan very quickly. Alrighty. And that is one where I have it set up for just the financial sector. So group is financial sector. Now, this is having this language in your head and knowing how to, it's, like programming language. So if you need to, you can use these to help you. So for example, if I want to add another group, I can say, or let's go and look at industries. So we'll add consumer staples, for example. All right, that adds it to the bottom. But I need an or, not an and. Because otherwise it would have to be in the financial sector and the consumer staples sector. Not, I don't think possible. So you're going to get no results. So that's what you want to add an or in, but be very, very selective about when you use ors, because or actually expands your universe. It doesn't narrow it. And you can think about it just like we've listed it here. The group is a financial sector or it's in consumer staples. So I've just built up my base of what we're looking at. And again, then you can see I just used the trend models to come up with where I wanted my EMAs. And in this case, I wanted a PMO that is crossed above its that is above its signal line. So I'll just run that very quickly. Were there any questions, Greg? That
we have one. Aaron, can you clarify the basis for PMO 35-20-10 parameters?
Okay. Well, I mean, whenever you see and people ask me about the EMAs, the default is what I used for the PMO. You certainly can adjust it, but when we created the PMO, that was those were the parameters that worked the best as far as crossovers and bottoms. But granted, it can be a little bit more intermediate term than short term, so you could certainly adjust those parameters. But I actually recommend not. I think like I said, based on our study and research and use of that indicator all these years, we find that that's the best setup for parameters. So here you go. I ran that scan. We only ended up with one in the consumer staples area, but we ended up with quite a few financials. And again, you could go, you have to save it before you can play. So again, I think this scan dump, that's a great idea, Greg. I don't know if you still do it, but I thought that was brilliant. All right.
In the book, I talk about a strategy to even change the names to something more memorable. So I've got John, Greg, Paul, Ringo.
Yeah, there you go.
So,
all right, so I'm going to use Candle Glance. Probably I would have used 10 per page, but again, this gives us a really good look. That one, very straight up move. I can tell you, I wouldn't want to be a part of that. This one, it is straight up, but it did pass that overhead resistance. But again, I don't like to get in on anything that's kind of in that straight upward move. I mean, if we go and look at it, right now, the intraday low is right at that support line. So this one still could be very interesting. And you can see the OBV is what it is there. And there's a possible double bottom and an execution of that. I need to see that a little more closely. Yeah, it's a little complex, maybe an Adam Eve double bottom here, but it is executed, crossed above that neckline, and it looks like it's getting ready to come back and to that breakout point. So this one's really set up nicely. I think this is a pretty good looking chart, honestly. Again, this is kind of how you get there, and isn't it great? The scan engine did all the work. I mean, we still have work to do by looking at these and figuring them out. But overall, I'd say it's a pretty nice setup. So anyway, I am going to get ready for that 10 and 10. I've already got some stocks lined up for you to look at, Greg. So okay. I think I'm going to have you just take that screen and let us go ahead and get started with 10 and 10.
Sure. Okay, and somebody had pointed out on the on the log roll there that we had A DIA had the Dow Jones Spider ETF, an RSI of over 90. So here it is, a 20-year view. That's not a common sight. So it's shocking to see just how bullish the market has been. That doesn't mean it's going to end anytime soon, but it does suggest that when you get to this level, try to be more selective. Would probably be the only thing I'd like to add there. There was one question quickly that I'd like to answer. So a lot of people had put in questions about commodity stocks, and for the second half here, I'm going to cover off commodities. So you're welcome to do that or to watch that. And then also, I've put out the commodity countdown report yesterday. I had some problems with it that the timing of the voice and the charts didn't line up. I've corrected that again this morning. So I've reposted it just before this show started. So if you'd like to go back and check it out and not be so annoyed by the charts mismatching the voice, you'll find that much better. But anyway, a lot of stuff on the commodities countdown recording is there. So let's get into the 10 and 10. And Aaron suggested we start with NVIDIA.
Yep.
Okay, I like to use the scooter a lot. And so let me just move this scooter from below or from behind the indicator to below. So one of the things I put it behind just because it gives me more screen real estate. But what I like when the scooter on something like NVIDIA starts to rock like this, let's just look at a 2-year chart. One of the things I will say is NVIDIA has had the longest running scooter I've ever seen, just pinned to the top for a couple of years already. Apple doesn't do that. Amazon doesn't do that. It's been crazy. So anyway, when I get this sort of signal, something is changing in the stock, and whether Nvidia can continue its run or not, these are cautionary. When you start to see the momentum, when the stock is no longer outperforming as much as it has in the past, that's cautionary for me. Now, the way I trade Nvidia, so even before we get to the price, you'll notice in here that Nvidia went almost 6 months where it underperformed the S&P 500, and you could see that in the price action. And then it got back on its run, and now it's kind of been sitting at this 3 or 4 month level. When a really strong stock stops outperforming, that's a concern for me. And just a lot of the work I've done suggests that's a great time to be cautious. Either keep this uptrend line in relative strength, and you would have seen it, it would have saved you whatever, $30 or $40 here. You probably wouldn't have got all of that, but it would have given you a clue that something was starting to slip. So the one thing I would say here on NVIDIA is just don't let this relative strength start to break to 4 or 5 month lows. Like in here, it broke down and then it just kind of maintained the relative strength. So it was tracking the S&P rather than outperforming. That's okay. But if it starts to underperform and actually starts a downtrend, and let me just show you an energy stock real quick. And the only reason to show you that is I want you to understand what this relative strength chart is telling you. When the relative strength starts to underperform in a meaningful way, you're finding that the stock is not doing very well because money's leaving the stock. So because the stock underperforms the index, then institutional investors aren't going to be putting money into something underperforming. They want something outperforming. And if you're paid to outperform the S&P or outperform your index and this stock's underperforming, it's hard for you to buy and make any money on it and not get fired. So you're better off to try and find things that are outperforming. So this purple area is a really important concept, the concept of relative strength. And so the one thing I would say on NVIDIA is it's giving us 2 clues that relative strength is starting to diminish. Now, that doesn't mean it can't turn around and keep going higher. I'm just saying don't let this slow down in relative strength get away. So this recent rally helps. Right now you're testing the previous highs, but if this starts to roll over and really starts to underperform, and you can see the volume yesterday was still above average, so that's okay. But just keep watching it here. I feel like the market stretched and extended, but some of these that have carried on for 2 and 3 years, it's really important to watch this. And I think Another good example of this, just to show, is Nike. And the reason I want to show it, let's just go to 3 or 4 years ago. So Nike ran right up into Christmas and then started to put in a choppy top. And you can see in here, the relative strength started to flatten out and the stock started to underperform. And while the stock is underperforming, this clue is going off up here that you're getting relative strength underperformance from, a big long run up. And then it stayed down here for a long period of time where it really couldn't get any momentum going. And now it's trying to get back. So if you start to see new 6-month highs or even 3-month highs are tradable, but 6-month highs are really nice. In this case, it's almost set up for a whole 12-month breakout. And a 12-month breakout on relative strength is going to invite more institutional investors. So when you're looking at a really strong stock in a big run, one of the clues that the end of the run is coming is that its relative strength will start to underperform or just perform at market rather than outperforming the market. Okay, so for NVIDIA, I'm a hold and I wouldn't sell it. I wouldn't buy more. I'd be looking for this relative strength trend to improve and start breaking back out to the upside again. I definitely want to get through that previous high on a big volume day. And
All right.
all the good things about NVIDIA, but
all right, Greg, we have to get through a couple of these. I love your analysis. If we may end up only doing 5 or 6, but
I'm all good with that.
Your analysis is awesome. So I don't think anybody's going to want to miss anything you're saying. So okay. The next one I have is another big one, Alibaba. Baba.
Okay.
I think you know the symbol for that.
Yeah, I think I do. Yeah. So Alibaba's really nice uptrend here in relative strength. I got too many years on this chart. Let me just shrink this down. I like to look at 1.5. I know quite a few people look at a shorter time frame. This has been chopping sideways, and a lot of the Chinese stocks have been doing that. But I would be looking for a breakout here to the upside. The Chinese market is starting to surge again, and so I would, as a group, this one, BZUN, all of the other Chinese stocks, JD.com, are all starting to look a little better. So I would like it right here, and I would probably really watch closely to make sure this breakout gets through. But I'm expecting it's probably going to turn higher.
All righty. Next one I have for you is a KGC. And I wrote it down. I can't remember what country it is, or country, which one company.
Ross Gold. Okay, so one of the things that I'm going to talk about in the commodity sector is the relative strength of gold is the gold miners to gold is starting to break down. So for short-term traders, it's probably time to lock in some of the gains we've had. I like the chart in general. The problem, it's been a 30-day run. It needs time to rest. I don't know if that's 2 weeks or 6 weeks, but I think all of the gold stocks need a little pause here, and probably the US dollars due for a bounce. So for me, the big thing that I'd be watching is you're right at horizontal resistance here for the last 2 peaks. If it can't get through it and it starts to break down at all, like below, I don't know, 440, something like this, like I want my stop relatively tight. And let me just deviate for a second to say why that is. KGC and 003. And the ratio that I want to point you to is the gold ratio, where you compare the stock. What did I do? Maybe I got one in there. Let's just look. GLD. No, I don't. On the when the gold miners start to underperform gold, if you're a swing trader, this is a really important chart. And you can do the same with energy, and I'm going to show that one later on today. But just looking for GDX GLD, you can see I look at it a lot. But the problem we're having here is that this ratio is starting to break down, and I'm just going to zoom in on the last, 6 months is probably okay. But what you see here, whenever you can draw a trend line on these relative strength comparisons, this sort of breakdown makes us very cautious. So I normally get a kick of some sort to change the trend. it would have got you out of a really tight trend. I normally don't want to sell on that first one, but if it starts to continue to break down, then I'm getting worried. And you can see GDX is starting to do the same thing here. So, we just want to be careful as we approach here. So I don't want to be a seller unless it continues to break down. But if it gets any worse, I don't want to hold these too long. Some of them have had 25, 30% gains in a month. Um, I don't really think that's a place you want to let just walk away. So anyway, that's the reason that I like it so much.
Okay. I have another popular one here, Square.
SQ, that was a good one. That was a nice little trade. Um, so, so the one thing about Square obviously was it was on a huge uptrend, and what we see here now, the relative strength had been declining, got back down into kind of 1 or 2 month lows. No big deal. That's normal. There was a lot of support down here at 34. So there was a don't ignore this chart article earlier this week, I think on Monday, that suggested watch it for a breakout to the upside. And I think the article was something like, "Is the square ready to break out of a triangle?" Something like that.
Nice. Very clever.
And so the important thing, though, that as this starts to run up here, there was a euphoric run here. Then all in one day, it let it go. Well, the stock just needed to breathe. It's still a great stock. I think it still runs up a lot. But, as we work our way up here, I think you just want to be aware if the momentum starts to make a lower high on this run, and maybe you want to use the 60-minute chart, but if the momentum starts to run out here, I'd be a little bit more worried. Two more things on this would be just ticking your fib lines and just snapping them on here. Probably a 61.8% retracement is going to be a pretty critical zone on this. You're already at 38%. I could even, yeah, I'd still like to stay at 34, I think. So the one thing I would say is just if it gets up around this 61.8, which is at 43.50, you really want to be aware of the trend right then. If it starts to lose momentum, you'd like to lock in some gains because it's already been 20% off the lows. So it's pretty nice little short-term 4-day trade.
All right. Let's see. Number 5, HMNY, Helios and Matheson Information Technology. HMNY.
There we go. Okay, and so this one's nice. Let's just get it on a weekly here for a little more scope. Yeah, okay. I'm not interested. What I don't like is the sudden moves in the stock, and then it has these high volume days. So in general, it doesn't behave. It's unpredictable, and it's both unpredictable to the upside and to the downside. So you kind of get a huge squirt, and then all of a sudden it runs out for a year. Huge run could run out for a year. So I would avoid this, not because they don't do something great or whatever, just that the problem I would have with it is the stock is too unpredictable to trade. It doesn't behave rationally like a day like this where it doubles and then pulls back, and the next day it's got nothing. So
Yeah.
I would just stay away.
All righty. TDOC.
TDOC.
Yeah. There we go. Teledoc.
Okay. Oh, this one's nice. I like
Yeah,
this.
nice little breakout.
Yeah, and more importantly, we're on a weekly chart here, and look where it is relative to its original surge. So I really like this chart. Let's just snap a line on it at 37, call it $38. Yeah, I love that pink color. Why does it default to pink for me? Anyway, let's pick a better color. I like something stronger like blue. And the point I want to make here is this is a really nice breakout area. As soon as you get through here, I want to see a lot of volume hit the stock, and I definitely want to own it if it breaks through this, especially IPOing in the last couple of years. So I don't even know what they do, but if they broke out here, I would buy this stock with my stop right at $38.
Oh, I'm sorry. I'm some days. Okay, so the next one is two for our Canadian friends. First one, SLF.TO.
Sun Life Financial, the insurance company. Okay. Great trend up again. Here we are, $52 stock. We can go back to a daily. The one thing I've noticed, all of the Canadian financials have been a little weak. They normally pull back in January, and then in Canada, in order to contribute into our retirement savings plan, your equivalent of a 401k, we call an RRSP. Normally, the banks do pretty well in February. Um, this was not a good year, but the Sun Life, I would, in general, this thing's been trending up in the big picture. It's a really strong company. Horizontal support at 52. Um, let's just grab that horizontal line and snap it at 52 here. So, it tried to break out. It's just wobbling around here. It might pull back into the 50s. You might be able to pick it up a little bit lower. But I think the important thing here is, this is basically consolidating for a year, and I'm fully expecting this to break out to the upside and to have another good year. It's a huge company that does really, really well in Canada. So I don't see any weakness fundamentally in the stock, and I sure don't see a weakness, in the chart pattern here. Unfortunately, a lot of the Canadian companies haven't performed as well as the US companies. Let's just talk about trendline placement a little bit. So I could have put it on these lower 2 points, which would give the stock, obviously the trend line would lay down a little flatter if I came off here. A guy named Tom DeMark likes to use the last 2 data points. But the other thing to remember is that if you can quickly line up and get 6 or 7 touches rather than just 2, that's always a better trend line. So you want something that really does mean support. And in this particular case, 1, 2, 3, 4, 5, 6, 7. So that line is much stronger than this line. So that's the reason that I snugged that up and ignored those 2 lows. Anyway, it's just an important point on how to draw a trend line is to make sure that you're getting maximum amount of support, especially if it's just slightly different. So,
All righty. I think we're going to just make this the last one,
sure.
and that is another Canadian one, very popular, weed.to. What's
The
going on there with the legalization?
the Canadian weed stocks have been on fire. So they have literally surged in a big, big way. You can see this move started in September. So this was $10 to 36. So it's been a triple. There's a little bit of consternation over the stuff that Jeff Sessions said yesterday, where they were going to stop the legalization or reverse the Obama-based policies of lightening up on the harshness of punishment around marijuana. So the stocks all had a 10% pullback yesterday. They're trying to rally again today. The one thing I would just say is they're so overextended. Do you really want to jump into something that moved 100% in a week? And
Right.
it's a little bit late. The other one is HMMJ, and that, whoops, too many M's in there. And so this is the ETF that tracks the marijuana stocks in Canada. They call it medical marijuana because all of them got approved to make medical marijuana, but our prime minister has decided that it's also going to be legalized for recreational, and you'll be allowed to grow your own in your house and have 5 plants or something. So this has been a stunning trend for an ETF, 9 to 24. Again, this move since December 30th or something, from $16 to $24, 50% in an ETF. I think you just have to protect yourself and take some money off the table if you own it, or figure out a way to lock in some profits either through options or something. But when you're starting to get 5 and 10% swings in a day, usually you're near a top. So I would be, when they're going both ways, it's okay to keep climbing, but as soon as you get this first pullback, you're likely to get a test of the prior high, and then that's really an important place to be ready to leave. That might take 1 week or 2 weeks, whatever. As it goes up to test this prior high, if it can't get back through it, you want to really have a tight stop, like moving it up quickly. Okay.
All right. Well, that concludes the 10 and 10. Here's a summary of what we went over. So our symbols, and actually we had 2 bonus ones, DIA, of course, you started off with, which was great. And then we got HMMJ at the end. So we kind of ended up with 10 after all. So with that, I think it's time to get into my sentiment report. So I'm going to move on over there. Let's see, that's not the one. That is the one. Okay. So let's get in here, and I'm going to actually come here so I can find it easier. All right, so I have all of my sentiment indicators in one chart list, really helpful. And I also have them in different time frames, etc. So first one I'm going to look at is the put call ratios and kind of look at where things are going here. What I look for are tops, bottoms, oversold, overbought readings, that sort of thing. And currently, I think it's really somewhat split here. I've only seen this, and actually we've seen it fairly recently back in 2017. But typically, you're going to see these tops coordinate or coincide, and we're looking at completely as far as the CBOE and the equity ratios, one is bottoming and one is topping. So I find that pretty interesting. And we're seeing lows here on the ratio for the OEX. And I think that, typically that's a good sign when it works a little opposite of these tops. So anyway, we're seeing a top and a bottom on these. So what typically happens after this? Well, what we're seeing here is we get a little bit of a decline. You can see just barely there. We got a little bit of consolidation, but then we ended up on our run. And this was even before the election back in November. So I think this looks pretty good at this point, but it's really split. So I would look at this as a little bit on the neutral side. All right, when I pulled this chart up, I had to say, Greg, look at this. This is really interesting. This is the AAII poll, American Association of Individual Investors. You can just go on their website and say whether you're a bull or a bear, and they tally up the statistics. And look at what we're seeing here. We have almost 60% bulls right now, and you don't see that too often. We certainly haven't seen it this last year. I'll show you a longer term chart in a moment. But look at this ratio as well, almost 4-to-1 as far as bulls to bears. So what is this telling me? Everybody is really bullish. Okay, everybody's really bullish, and why not? Why wouldn't you be after what we're experiencing here? But this is really an excessive extreme. You don't want to see these kind of numbers on the bullish side, because typically it doesn't end well. And I've highlighted a few times where we've gotten these sort of warnings before. Obviously, looking back here after November, the rules changed with the strong bull market we've been in. So I think that the rules are not changing as far as these readings. They're exceptionally high. And I'm going to show you a longer term chart here to get some perspective. All right. So this chart is the last, let's see, it starts in 87. So we're looking at, a 20-year chart or something like that, 30 years. So what I wanted to note was in that time frame, and I've drawn a horizontal here at some of the peaks, and you can see we're not quite there, but this is a very, very high reading. We haven't seen this type of a reading since 2014. So I think this is significant. And when you look at in the longer term, what happens when we end up with this sort of a 4-to-1 ratio or higher on the ratio, the bull bear ratio, you're typically going to see some downside after that. I mean, look at this. We had very bullish. It was very bullish here, right at this top, very bullish. And then what happened? It kind of fell apart at that point. So with sentiment, as I tell everybody every week on Friday, sentiment is contrarian. So if everybody is bullish, that's bearish. And in this case, everybody is very bullish, and that's bearish. And I would say it's to almost a euphoria situation. I mean, it's a really high ratio right now. All right, so this is the National, Association of Active Investment Managers. I believe that's what it's called. So, Yeah, actually it is. So we can see that this tells us the exposure of these active investment managers. Okay, so how exposed are they to the market? So I like to watch this to see where their mindset is. So we were really exposed a month ago. They were very, very high. And typically after that, you usually see a decline or consolidation in this case. We got what, a couple weeks of consolidation, if you want to call it that. And then it pulled back. So it didn't turn out to be quite as bad. But the fact over the last 3 weeks that exposure continues to be pulled back should be a little bit of a concern here. The big guys are starting to pull back their exposure from having it from being very exposed to being more in the normal situation. We're not looking at extremes as far as exposure levels being really low. We're looking at them being very high, but they are pulling it back, and I think that that's something that we should be concerned about. All right, and finally, what's going on with the RIDEX ratio? And this is, so those last two are, well, the first one was a poll. Somebody, you just go in and say how you're feeling. The second one was actual numbers of what these investment managers are doing. The RIDEX funds, we track the bear funds, the money market funds, and the bull and sector funds. RIDEX every night gives us how many assets are in each of those buckets. And so we watch where the money is going or leaving to give us a really good idea of what's going on. And you can see with this is an inverted scale, okay? So that means that when we're getting a lot of money in the bull assets in the denominator, the number or the ratio is going to get smaller and smaller and smaller. And as you can see, we've been on a tear here since September of 2017. And look at the bull sector funds. So even though we have these pullbacks overall, we saw a lot of money going into these bull and sector funds. What's happening right now? We already saw that the investment managers are pulling back their exposure. What's going on as far as real dollars? And what you can see is right now, the bear funds, we're getting an increase. And when we look at the money market funds, we're getting an increase. What's happening to the bull and sector funds? We're getting a decrease. So basically what this is telling us is that money is leaving the bull and equity funds, and they are moving into either cash or into bear funds. So as far as the money trail, we see exposure being pulled back by active money managers and by investors. When you're looking at the RIDEX ratio, we're seeing money rotating out of the bull funds and into the bear and money market funds. And that to me should be a little bit of a concern. So in conclusion, let me get that.
Aaron, I was just going to add on there. One of the things Bob Pisani presented this morning was that there was a $10 billion outflow of money out of SPY and out of all three, the IWM, the QQQ, and the SPY. There was, a relatively large outflow considering especially how well they've been performing lately. Yeah. So and 10 billion on the size of SPY is nothing, but at least it says that there's a net bias towards an exit, not towards an entrance. So anyway, I just think that's interesting after the run we've had.
Exactly. That's exactly what I think these charts are telling us right now. So let me get to a summary here. There we go. So here's basically what, if you want to summarize what we talked about. So remember the 10-day moving average of the put call ratio, they're diverging. And to me, that kind of leaves us in a neutral position. That doesn't happen very often. So I'm just calling that neutral at this point. I kind of am erasing that from what I'm thinking about here. AAI, remember, bullish extremes, numbers we haven't seen for years. And so that would be very bearish, extraordinarily bearish in my opinion. Name, we're seeing pulling back their exposure. I think that's neutral to somewhat bearish. Typically, if you're looking at that and we talk about sentiment being contrarian, I would look at it more as not necessarily a bearish reading. I think it's actually telling us something, that exposure is being pulled back. As you were saying, Greg, it's more emphasis on exit than entry. Money moving out of the bull funds and into the bear and money market funds. So when you put it all together, the polls are showing excessive bullishness. Oh, everybody is so happy. But when you look at actual money, it's starting to pull back. And so I think that should give us pause. Of course, with this very strong bull market, it may only mean a small decline. I think Tom was actually with us during the prep time, and I know you guys were talking about that. So anyway, with that, I think we probably can move into mailbag and wrap up and see what kind of questions we have out there. If you had a question about what we've been talking about, feel free to put that into the live chat box. This is one reason why you want to watch live, guys. You can participate in the program by going right into the chat box. You can participate by talking to other people. You can participate by talking to us. If we're not presenting, we do linger in the chat box and we'll answer questions there as well. So with that, were there any particular questions you wanted to look at?
There was a couple around energy that I just wanted to point out, and so this is a really simple chart of XOP compared to West Texas crude, and the change on this chart, again, much like that gold chart I showed, where you just keep track of the uptrends. So here you might say here or here, it doesn't really matter. You're within a couple of weeks of each other here, but when you get these big uptrends and they start to break down, that's kind of when you want to get out. Now, again, drawing a trend line in hindsight is pretty easy. We can see XOP really was a severe downtrend here, and every one of these little rallies were a place to sell. The problem is we still have this big downtrend in energy versus in the energy stocks versus oil. So even as crude is hitting $62, these are going up, but they're still underperforming energy. And so until we get this trend change where XOP really starts to fire it up ahead of West Texas, I think we have to be careful. So right now we're just looking at a little short-term run here, but while oil has continued to go higher, XOP is right in the zone here where we need to watch. So a breakout to the upside would be extremely bullish. I just, I'm noticing a lot of the energy stocks are stuck right at resistance. And when you get this sort of trend break, let's just take a vertical line up like this. So when these things start to break down, it usually causes corrective activity, and I could draw these wherever you want them. I could put them on the chart, but usually whenever the stocks start to underperform the commodity, which is what this bottom area tells you, it's an important place to watch. So for everybody who's long energy right now, and I'm very long energy, if that starts to change, I have to change my tune. And so I'm really worried that we're not going to be able to break through this trend line. I would have thought all through this period in here, especially when oil started to break back out above 58, we'd get more involved. But it's kind of wound into a tighter band, but we still haven't had the thrust that we need. Now, maybe, something more out of the Middle East would cause that. Something out of Nigeria could cause that. Venezuela, there's enough reasons, but it hasn't broken out yet.
Wow.
So,
Yeah, I mean, I've been watching the USO weekly chart, and we got a pretty significant breakout on that from the trading range. If you want to pull that up, I'd be curious
sure.
your opinions on that.
So the one thing I worry about watching the USO trading range, because it tracks oil, right? That's what it's supposed to do. But the problem is it has a lot of lower drift. So as an example, it's just breaking out and oil's way up here. So if I put West Texas on this chart just to overlay the two, so the way you do that is you go down and you grab price, and then you're going to put it in WTIC. But we're going to put it behind price. We're going to make it with a solid line. We're going to make a color of whatever blue, doesn't really matter. Height doesn't matter. But what we want to see on this chart, when we do this, what you'll see is oil's way up here, and yet this chart doesn't show that. So this chart looks like it's just breaking out, yet oil broke out 2 or 3 months ago. So
Mm.
the one thing that's when you're looking at an ETF that's a tracking ETF, you're always better to go to look at what the real commodity traders are trading, because they're trading a breakout on price above $55. They're not trading a breakout in price, right now, that's just recently in the last couple of days broken out on USO.
Hmm. Good point. I like that. Yeah, I usually put both on my USO chart, WTIC in a window below. I kind of like this overlay, though. I might just do that.
Yeah, it just helps you to make sure that you're trading what the commodity traders in the pit are trading, and they're trading that breakout above 55. So,
And that held that support level too once it broke out.
okay, so that's another important one. Anything else in the so the one thing, there's some conversation about uh, the marijuana stocks. Just there's a couple of ETFs, but there's a lot of the marijuana stocks. Again, most of them have run 50% in a week. So I would just, when you're trading parabolic moves like that, it's not something to buy and hold usually. So you probably want to be more ready on the sell signal to lock in a 50% gain. Some of the stocks, it's 100%. So, when you're making 10 years of gains in a couple of days, you should probably put those in the bank.
Yeah, I always recommend a trailing stop on parabolics.
Yeah.
Once you're in, and if you have that trailing stop and it pulls back enough that people are going to start waterfalling out, you get out early. I mean, it saved my bacon on Amberella back when I traded that parabolic.
Yeah, I'm going to do the same thing here with silver and the silver miners. And what I want to show here is the price of silver is in blue, and we can just see the miners can't get above this 200-day moving average, and that's a problem. So we're stuck under here, and until that trend line breaks in the silver miners, we're just stuck. So all of the precious metals, they've been on a 30-day run, but the issue is they're just not breaking out yet. And so one of the concerns I have here is we're starting to get near that level on just about every chart. And so as everything presses to the upside, you really need to make sure it's going to break through or take some profits, one of the two. But don't,
All
don't
right.
let the gains we've made slip away.
Excellent. Well, it's about time to wrap it up. We've got about 3 or 4 minutes to talk about what we're thinking as far as the market. Where do you think we're going to go? It is Friday, so we usually put in our vote for the sentiment poll. For Mark Young does a sentiment poll, and so the Wall Street. Oh gosh, my head is just flying here. The Wall Street sentiment survey. He was actually on the program before Thanksgiving. He was great. But anyway, we always give our what do we think is going to happen next week? Is the market, the S&P, going to close higher on the week, or is it going to close lower on the week, or probably stay close to the same? I'm going to put the question to all of you on Twitter, so you'll want to go find at MKT Watchers on Twitter to take the poll. I keep thinking we were going to get some pullback or something like that. I think that Tom and John Murphy, of course, he's always right. Well, almost always right. Both of them were saying that, usually that Santa Claus rally will kind of move out into the first week of January. So I think I kind of got caught on that. But next week, I think we're going to close lower. Those sentiment charts definitely have me a little bit concerned at this point.
Yeah, there's a guy, Larry Williams, good commodity trader, but he always talks about blow off Fridays, where you've basically had an unbelievable week and everybody goes home so happy. And
Yes, exactly.
nobody's got any money left to put back into the market because it was all in last week. So that's one thing that I would just add on top of Aaron's comments there, that it looks more like a blow off high that just needs a little time to pause. Not a new bear market or anything, but
Right.
a time to pause. So if you're looking to enter the market, I think you want to find maybe some defensive stuff that's starting to bump out of a base or something like that might help you a little bit.
Yeah, absolutely. All right. I
Okay,
guess,
I should probably wrap it up, I think, here.
yes, I'll let you do your spiel. But before that, just another reminder, Bruce Fraser is going to be on the program this coming Wednesday. And we do have some really great guests getting lined up for January, February timeframe. And I happen to know Carl Swenlin, my dad, is going to be joining us. I think that was my greatest accomplishment in 2017 was to get him to agree to go on the show. But anyway, I'll let you wrap it up for us, Greg, and I'll talk to everybody on Monday again.
And next week on the Market Outlook, I have got Don Vilu from Canada, who's a really nice guy, a swing trader, does a lot of seasonality trading. So if you like that kind of thing, Don's going to present with me on the Saturday morning, January the 13th, and that's at, I want to say 11 Eastern. So just check the programming there. It's on the same webinars tab. Just go onto the right-hand side instead of the left. But that's next Saturday, not tomorrow, but 1 week out. And so with that, I want to thank all of you for being with us today. Please remember to complete the survey as you exit. We'd love to get your feedback and hear what you think of Market Watchers Live. As a reminder, Market Watchers Live airs 5 days a week, Monday through Fridays from noon to 1:30 EST. Have a great afternoon, a good first weekend of 2018, and happy trading.